Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Nina Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Nina Mishra. Joining me today via phone from Perth, Australia is Jerry Hicks, manager with the Perth Mint. Jerry, welcome and thanks for joining us.
My pleasure.
Okay, before we get into the outlook for gold and the details of your ETF, I wanted to talk about an interesting story that caught my eye last week. So the Wall Street Journal reported about the world's largest gold coin that was displayed outside the New York Stock Exchange. And the Perth Mint actually flew this coin all the way to the US on a publicity tour. So tell us about this coin and its journey to the US. Why did you decide to bring this coin to the US?
Okay, so we brought the 1 ton coin, which is 2,200 pounds approximately of gold, 4/9 purity, so that's 99.99%. We made it about 7 or 8 years ago, and we've had it on display in Perth to showcase the expertise and the quality of the gold products we make. And we decided to bring it to New York and to put it outside the stock exchange for the day so everyone could see it and everyone could get talking about Perth Mint and what we do, and to do exactly what we're doing now, to talk about our gold ETF, which we launched last year and for which we had the bell ringing last Tuesday.
Okay, excellent. So this coin, I understand it measures about 32 inches in diameter and it's about 5 inches thick. So as you mentioned, it's worth about 45 million and it weighs 2,200 pounds. But you were not particularly worried about the theft of the coin. And because most people do not understand how much gold, how dense gold is, and they do not even know how malleable gold is. So probably you were not worried about its theft, but you were worried about the damage to the coin. So talk to us about it.
Yes, it's actually moved in a special packing crate, and it's shipped in the hold of a commercial airliner. So it went probably via Hong Kong to New York, and then from there down to Perth in the hold of a commercial airliner. We move gold around the world every day. We actually ship gold to 130 different countries, but normally in smaller denominations, normally in 1 kilo bars. So each bar is about 32 ounces. We ship up to 5 tons a time to our big markets of China and India. And if we'd had a ton of kilo bars, each kilo bar would be about the size of an iPhone. If we had a ton of that outside New York Stock Exchange, we'd have been in real trouble. But one big coin, you just can't move it. It's a huge lump, and it looks stunning outside there. And I suggest that all your listeners Google, if they're not familiar with what we're talking about, they Google gold coin New York Stock Exchange. They can see exactly how it looks outside the exchange, but far too big for anyone to move. But in a way, we were wondering if someone did try and steal it, the additional publicity we would enjoy would have been quite something.
So did you get a big insurance for the coin?
We did, yes indeed. But thankfully, we won't be needing to put in the claim.
Yeah, okay, that's good. So here are some fun facts about gold's density and malleability. Gold weighs approximately 19 times as much as an equal volume of water. That's according to the physics fact book. So back in the day of the gold rush, the density of gold played an important role in the panning process. And gold is very malleable too. So a sheet of gold can actually be made thin enough to be transparent. So that's why pure 24-karat gold is usually mixed with other metals in jewelry for more durability. But your coin was, you said, 99.99% pure. So as far as density of gold is concerned, they don't get it right. And, some of the Hollywood movies which depict gold highs.
That's right. You see gold being moved around very easily. it's so heavy. One bar, the 400-ounce large bar, like you see in the movies in the bullion vaults, it's so deceiving how heavy they are. And if you remember the film Three Kings with George Clooney, when he's in the Gulf War and he's discovered Saddam Hussein's gold, he tells his partners in crime to find only Louis Vuitton bags to move it with, because they're only bags strong enough to put some bars in and carry them. You just put the bars in a normal bag, and they just rip straight through the bottom of the bag. It's so deceiving just how heavy a bar of gold is.
Very interesting. So the Perth Mint, I understand, is one of the largest refiners of gold in the world. Could you tell us a little bit about the Australian gold mining industry, the history of the Perth Mint and its ownership?
Sure. So Australia is actually the number 2 gold-producing nation in the world. We produce around 310 tons of gold a year. The number 1 country is China, around 450 tons of gold a year. But China keeps all of its gold within the country, whereas Australia is the largest exporter of newly mined gold. The Perth Mint has been refining gold for 120 years now. We're owned by the government of Western Australia, and we refine 95% of Australia's production, as well as we refine gold production from other nations in the Asia-Pacific region, and we also buy in scrap gold for recycling. So in total, we probably refine around 350, 360 tons a year, which is equivalent to around 10% of global annual production. So we're major players in the worldwide gold industry.
Okay, so the price of gold has been rising of late. In fact, it surged to a 6-year high this month, thanks mainly to geopolitical uncertainty and also dovish tone from global central banks. So what is your outlook for gold now? Where's the gold headed?
Well, I'm not really allowed, unfortunately, to give my personal view on where gold is going. Mm-hmm. But what I can say is that traditionally, when interest rates are low, gold has tended to increase over time. And at the moment, of course, we have, as you alluded to, low interest rates, and that's certainly the view is that will continue for some time. Indeed, rates may go lower still. So that's generally considered a positive for gold.
Correct.
Some other trends that we can talk about is increased central bank purchasing. Mm-hmm. You can't seem to open a newspaper without seeing how central banks, particularly China, are increasing their holdings of gold reserves. And I think this has been 9 consecutive years in a row where central banks have been net buyers of gold as they seek to get out of US dollars and diversify their holdings. So these kind of trends are seen as positives for gold. Another factor which many of your listeners may be familiar with is the role of gold in Asia as a store of wealth. Culturally, China and India have a great affinity for gold investments, for gold holdings in physical form in their hands. And one of the biggest movers last year was Crazy Rich Asians, and lots and lots, lots and lots of people in the region are now middle class. The middle class in China and India is growing massively, and the demographics for the demand for gold are certainly positive longer term.
Yeah, that's right. And in fact, if the Fed cuts rates this month, which is very much expected, then it could result in the weakening of the dollar a bit. And that in turn would make gold attractive in emerging markets like India and China, which, as you mentioned, are the largest consumer of gold in the world. So that could also benefit gold. Now let's talk about your ETF. It's the Perth Mint Physical Gold ETF with a ticker symbol AAAU. So tell us about this ticker symbol and about your ETF.
Thank you. Well, first of all, the ticker code of AAAU, first of all, the AA refers to our owners, the government of Western Australia, which is AA rated, and AU is, of course, the chemical symbol for gold. So we put it together to make AAAU as our ticker code.
Okay.
Simple as that.
Sure. So tell us about this ETF.
Right. So we've launched our ETF in a market which is extremely competitive. We've come in at 18 basis points to really get people's attention. We've got some other, 18 basis points being very competitive in the marketplace. We've got some other very unique features which will get people's interest. First of all, which I alluded to earlier, that we are owned by the government of Western Australia. And furthermore, the gold held in the fund is guaranteed by the government of Western Australia. So the first sovereign guaranteed ETF ever launched. So that's something very interesting. We vault our gold in our own vaults in Perth in Western Australia, so offering investors a nice diversification from the typical centres of London and New York. And personally, I can tell you, after having flown to New York and back from Perth in the last week, it's a great place to store your gold because Perth is a long way from anywhere, and I'm still recovering from all that travel. So it's well worth having your gold in Perth. Very stable, political place to keep your gold. And finally, which will be probably of interest to many of your listeners, we allow investors in AAAU to exchange their shares in the fund for physical gold, which we can deliver to them. So we refine all sorts. We produce all sorts of gold products from to suit all investor pockets, all sorts of coins and bars, and we deliver all over the world every day, as I said earlier. So in the US, for example, we're number 3 supplier of bullion, bars, and coins. Lots of gold bugs in the States will know us already, and we deliver in the States every day. So if people, we found that investors were concerned during the last GFC that they had ETFs in gold, but they couldn't actually exchange that ETF and get their hands on some physical. So this is a way where investors can invest in gold, and then at any time, if they want to exchange those shares for physical, maybe to give to their children or grandchildren, or just because they want to have some gold in their hands, they're welcome to do that. They can just go to our website at AAAUETF.com, use our little calculator there, type in how many shares they'd like to redeem, and they can see the range of products they can get in return. So it's just another nice feature to have.
I agree with you. The pricing is very competitive at 18 basis points. And this redemption for gold bullion is an interesting feature. And the calculator on your website is pretty cool. So our listeners should definitely take a look at that. But how important is geopolitical diversification for gold investors? Should it matter a lot where their gold is held?
It should do. It's just worth considering. People buy gold to diversify their holdings, and it's not just another way of diversifying from their equities may be centralized in New York or London, and again, it's just diversifying that bit more.
Okay, so switching gears a little bit, I wanted to talk about the role of gold in an investment portfolio. So we all know that gold usually has low correlation with other asset classes. So that is why I usually recommend that investors should have about 5 to 7% allocation to gold in their portfolio just for its diversification benefits. What are your thoughts on that? How much gold should investors own?
Well, again, I'm not allowed to say I'm not a financial advisor, but I'd suggest all take some professional advice. But certainly, we've, as you alluded to, lots of investors consider between 5 and 10% as being a reasonable exposure to gold. And of course, with they may decide to hold more given their own views on how things are going geopolitically, but certainly astute investors would have between 5 and 10% in gold, but do take your own financial advice on that.
Okay, great. Anything else investors need to know about gold or your ETF?
Well, just to certainly consider the Perth Mint Physical Gold ETF. Do come and have a look at our website at AAAUETFs.com, and also visit our website at perthmint.com to view the other means by which we allow people to invest in gold and also purchase gold online. So we're very active in the gold industry. We've been refining gold, as I said, for 120 years, and our government ownership gives investors that additional peace of mind.
Excellent. That's all we have time for today. Jerry, thanks again for joining us.
My pleasure. Thank you for having me.
Thanks for listening. To learn more about gold ETFs, please visit the ETF section of Zacks.com. Make sure to be on the lookout for the next edition of ETF Spotlight. If you have any comments or questions, please email podcast@Zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.